Welcome to TradeTheNBI.com. This is John. This report is for the 12th of February. The market juggernaut continues. There is no concern whatsoever about the coronavirus because the market has decided that with all that liquidity, you got nowhere else to put your money but in the market, so go for it. It's interesting because China is now reporting a lower death rate and a lower infection rate than they had been from the previous day. So, I mean, I guess that's supposedly good news, and that is justification for we're buying. We had already seen this happening, though. We already had the crossover of green and the science. I mean, this is all going back to that original buy. The 50K from our NBI Opus Power Mode Opus 2T has been in a buy for ever since the dip, which it seems like forever ago, but it wasn't that long ago. The NQ, obviously, NASDAQ looking even stronger. Short-term buyers are still in a complete reset, so even if you get short activation, it's going to take some kind of event to really create the selling, and so it's just a matter of following the ABM yellow at this particular point. It's a piece of cake to do that. And of course, the euro, it's a disaster, though it's interesting, there were some reports of additional cases in Europe and some people who had been previously released into the public testing positive, but of course there's nothing to be concerned about that at all, so we'll see. But this is just a manifestation of Brit exit, and the fact that it's even holding up this well is attributed to central banks doing their best not to let it collapse, because it does put more pressure on the U.S. and they're really not interested in that, because nobody knows how bad this global supply glut is going to be with oil here, and that's why when we look at the USO ETF, we're in plummet city, and this isn't going to rise at all, even though we had the slight move above 13.5 and the dip of orange. We're so far below negative 13 on the shakeout that no. And what we have done, though, is revisited the lows, and now we're making better extremes. So now if we get an improved red DOC like P2 or whatever, it could happen in another few days, then you might be able to see some stability in it, but for now, no. And from a gold standpoint, it's going to stay elevated. There's just no reason for people to be running out of it just yet. We are in a weakness spike here, though, with the rejection of midterm buyers and short-term buyers in the DOC here, so it does indicate there might be a little more weakness. So that's an easy one. You just follow the ABM gold right here on the ETF. It's at 147.86, and we're just slightly below it. So below, you can be either neutral or out, or as you can see, we've been making successfully lower shakeouts near the highs. I don't know how excited I want to get on a short, knowing that any negative reports coming in about increasing virus would certainly spike gold, as well as put pressure on the market. And we can see here's that rise, and we all came off of what we had already previously marked, which was the 33.53. Mentioned it in the video report in the pre-market that we had, and that we would be coming back to that breakout of the positive extreme. Sure enough, we rose, well, it was a pretty decent chunk. We went from 33.50 to, I believe it was 74. So it was about a 20-point move, and then we got the sell signal, and guess where it went back down to? Exactly where we thought, right down here at the 33. Actually dipped a couple of ticks below it, but that's all right, and then put in a new buy signal, and that's what we've been experiencing going into pre-market right here, as it's back up 13.50, which just takes us back to the high of the previous day. So all in all, it doesn't get much easier for us than this. It's pretty straightforward, clean action. The colors on the candles dictated, and we just execute with it. So if there's something interesting, I will certainly put it up on the Skype chat. As always, though, trade well, and we will talk again later.